Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we have Steve Griffiths from MTPredictor, and he's here to talk about trade location, position sizing, and risk reward using MTPredictor. Some of the bullet points that he's identified for today include talking about the new MTPredictor 7.5 platform, how to find a trade using MTP's built-in scanner, determining the position size, using the MTP tools for the correct sizing on each trade, and like I mentioned, assessing risk and reward, again using a tool in MTPredictor that will help you do that. Steve also has a setup, one of his favorite setups that he calls the Holy Grail. I believe that it's trading the Wave 2-3 formation, and he's going to go into detail about that. As you guys have questions, you can go ahead and type them into the questions box. Steve has asked that we hold the questions until the end of the presentation, so he'll answer them at that point. The webinar is being recorded as always, and I'll post the recording on BMT sometime tomorrow, also on YouTube. If you guys are watching the recording at a later date, do me a favor, give us a thumbs up on YouTube if you like it, and leave feedback on the BMT forum right below the video if you're watching on BMT. That helps us decide what to do for the future webinars. Okay guys, with that, here comes Steve.
Right, hi. Hear me okay, and whether you can see my screen here okay.
Yeah, now we can hear you.
If there's any problems, then Mike will let us know.
I can hear you now, and we see the screen just fine.
That's absolutely fine. So that seems to be good. Okay. Well, first of all, a big thank you to Mike for inviting me in today. It's been a long time waiting to come and talk to you guys. So it's very good to be here. So thanks very much to Mike and for getting this arranged. Right. As Mike says, what I'd like to do today is I'd like to talk not only about the MTPredictor software program and how you can use that to uncover some of the trade setups I'd like to talk about. But I'd like to make the webinar educational rather than making it a dry sort of webinar just talking about software features. I want you guys to go away from this with some trade setups you can think about yourself and some ideas that will hopefully improve your own trading to make it better for you guys as well. So I want this to be an educational webinar as well. So before I get into the nitty-gritty of the kind of things I'm talking about, just want to give you a 2-second history for me, because you want to just know, well, who am I? I started trading myself back in 1987, just before the 87 crash, and what's that, 26 years ago. Traded myself for the best part of 15 years, and then started MTPredictor as a company and software back in 2001. So MTPredictor's been around a while, going for 12 odd years. So we have been around the block a few times. Right, let's get on to some nitty-gritty. I want to go back and have a look at the NQ from a couple of days ago on the 22nd to show you the base kind of things that we start with MTPredictor. One thing we know, well, anyone who's been in the industry for a while will know that typically 95 to 97% of amateur traders tend to lose money. It's mainly because they tend to go after the wrong thing, and it's quite hard to see this. So what do we do about it? Well, what we try to do, and I've tried to do over the years, is try to do like a two-step approach with what we do in MTPredictor. Is there's far too many people who want to, first of all, come into this industry and straight away have a winning system that can make 80% winners. They want to pay $10 for it or borrow it from a friend, basically make no effort, no monetary commitment or anything, and basically want to be a trading success overnight. Now, for you guys who listen to this, a lot of you guys will know you've probably experienced that, and that's not the way to go. So what we realize at MTPredictor is, or what I've learned over the years, is rather than trying to get people into our advanced techniques right from the word go, it tends to be too much for people. So we try to get people in like in a step process. So what we've developed, or what I've developed over the years, is our automatic setups. You can see these on our charts here. These are, we call them TS1, 2, 3, and DP setups. Excuse me, I've got a little bit of cough at the moment, so hopefully that doesn't disturb people too much. So why do we use these to start with? Well, we use these to start with for the sole aim of trying to get new traders or people who are losing traders stop losing. Now, how do we do that? Well, first and foremost, most people want to go for, as I've already said, systems that are 80, 90% winners. The only way to do that is to have systems that take profits quickly. In other words, their profits are small. What happens is you can then have loads of small profits, have one big loss wiped out. If you read the Market Wizard books, again, what I want to do throughout the webinar is try and show you the kind of stuff we're doing, how it's sort of, there's history behind it, so it's to give you a bit of weight to it, a bit of flesh to it. So if you go through and look at some of the Market Wizard books, Market Wizard 1, Market Wizard 2, you'll see that the overriding criteria there to be successful is to have trade setups where the initial risk is small and under control. In other words, your losses are kept small and your profits are large. The opposite way to what most amateur traders tend to do in their own trading. So we want to flip it on its head. So this is basically what we try to do with this approach. And our automatic setups will come on the chart. The scanner that we have here that is running, you can set up what markets, what time frames you wish. I'll show you in a bit later in the webinar how we can populate these and how it can be easy to actually set these up. But the idea being is that it's basically I won't say mechanical system, because I don't really want people to trade this purely mechanically, but basically it gives you the discipline to try and only trade at certain times, and the discipline to trade in a way that will try and keep your losses small and your profits large. We try to make it easy for people, and then we have automatic setups on our charts. They say that, as I already said, they come in on our scanner. We filter these in the direction of the large degree trend, because you've probably all heard that the best way to trade is in the direct trend. It's like swimming in a river, better to swim with the flow rather than against it. For this, we have a very simple indicator, which we have at the bottom here, color-coded, very easy, blue for an uptrend, black for a flat trend, and you'll see in some other charts later, red for a downtrend. So the automatic system is very simple. If you've got a buy setup, the STF is blue or black, it's a good one to take. If you have a sell setup, and the STF is blue, it's against the trend, therefore you avoid it. So it's really, really straightforward and simple. The mechanical system, it has periods of losing trades and periods when you will go through harder times. This is why the sole aim of this is to purely get you some discipline to then try and stop you losing. It's not about making big money. That will come later in some of the techniques I'll show you a bit later in the webinar. So what do you do when you get a setup? Well, for this we need to place some analysis on. I think this is the bit that Mike is looking forward to here. Again, this is really easy. If you have a buy setup, we look for a blue buy bar, dead easy. You hover the mouse over it, right mouse click, do an analyze setup. Now this is where our position size comes in. What is position sizing, I hear you say? Well, position sizing is where we vary the number of lots, contracts or shares to keep our position sized, in other words varied, to keep our initial risk small and constant. And the most important thing is constant. In other words, here we're risking less than 2% of a sample $20,000 US amount, therefore that's less than $400. So for a $400 risk, you'll be trading 3 contracts, particular entry and stop level. If I look at another trade setup, I know we're not taking one just yet, but if I did it, whoops, I didn't mean to do that. If I take that one there you'll see the position was varied, so it was 8 contracts. So the number of lots, contracts or shares varies to keep your position small and under control. Now that's probably new to a lot of you, and it's, I think the first tip for today is if you want to become successful, you have to keep your losses small. You have to keep your losses constant throughout all your different markets and time frames. In other words, over time, you want to be able to have your profits, like we have here, greater than your losses. In this particular example, the market went up to its first target. The profit would have been 2R, in other words, 2 what we call risk units, or twice the initial risk.
And
we
Steve,
also have,
could you just
yep,
briefly show us where we can configure those parameters? I'm assuming there's a panel somewhere for account size or like a risk parameter and how much we want to risk per trade.
Yeah, exactly. That's right. I'll show that in a couple of seconds' time, actually.
Okay,
So
thanks.
if you mic, that will come in a couple of seconds. So I want to show you something else that will tie into that as well. But you're dead right. That's what you need to set up. Just want to cover very quickly before that is we have little trials on the charts here, because it's all well and good seeing profitable trades, but we also want to show the losing trades. Now, these are always losing trades. Allow you to place the analysis, and in this case, this setup, you come in here, the market went down and stopped you out for a losing trade. So I want to stress right at the start of this webinar, losses are important. Every single trader, every single system will have losses. That's just a fact of trading life. What we need to do as traders is keep these losses small, and this is what we try to do with position sizing. So this would we call a -1R loss, in other words, losing 1 risk unit. The trade profitable here, as I've already shown, would have been 2 risk units, or 2R. So hopefully you can suddenly see if your losses are kept small at -1R and your profits are 2, 3, 4 greater than your losses, you come to have large profits and small losses, which is the key we're after. Now, obviously, you came in and asked the question there about how you configure that. Well, that's a very good question. I clear that off. In the software, we have, under our Tools section, we go to our Account Manager, and here you have different sections. We have a few of them already set up for you. You can set up new ones if you wish. So if you're trading Forex, you can put your account size and what percentage risk you wish to risk for each Forex trade. You can also put in your base currency. Now, this is very important, and this is why I wanted to say it till now, is that when you trade across different markets, for example, we know the NQ is traded in dollars. What happens if you trade in something like the DAX and your account is in dollars because you're in America, you're trading the DAX. The DAX is actually traded in euros. What do you do then? Well, this is what I'll show you in a second. But before we get there, you can set up different risk parameters for your futures, for stocks. So you can see their stocks, we actually put in 0.5% risk, futures 2%, but you can vary all this you wish to. You can add in new parameters here as well if you want to have different ones as well. It's all very configurable. But what I wanted to mention on the base currency was you can have whatever base currency you wish. So if you're in Europe, you'd probably have your account in euros. If you're in the UK, it'd probably be in pounds, Australian dollar, wherever you're based. So let's assume you're in America. And that's your base currency, in other words, what's with your broker. We have a nice little tool here that is called currency cross rates. Now, if your data feed has got Forex associated with it as well, for example, FXCM, eSignal, IQ feed, etc., you'll probably be asking me what data feeds we cover, and that will probably be a question later on the webinar. But what we can do here is just click on Get Rates, and it will go off, and it will just go and get the currency cross rates for all those crosses. And as you can see, it's just doing it all automatically for you, all very nicely. Now, you may say, what's the point of that? Well, we know from here that the euro US dollar currently is about 131. So when I go to my DAX chart, if you look at the top, we have 2 figures here. The first figure is our currency or our account in our account currency, which is what we assume to be our broker. The next one is adjusted by the euro US dollar rate in this case, because the DAX is traded in euros. So this equates to $15,000 at what we call a chart currency. Why is that important? Well, when we place our analysis on our DAX chart, it means that our position sizing here is then position sized, if you want that for a better word, on our 15,000 euro account. In other words, it's taking account of the different cross rates between whatever markets you're trading. And again, why is that important? It's important because it means your losses or your risk is then kept constant across all the different trades you do, no matter what market, what time frame you're doing. And that is absolutely vital to keep your initial risk small and under control. And only then can your profits relate to your initial risk, because if these are kept constant, your profits when they come through are always directly related to your losses, and that means you can then truly have large profits and small losses, which is what most people strive to do.
Steve,
if you want to learn more about position sizing, sorry, Mike.
Sorry to interrupt. Could you clarify, please, what those triangles are? I'm not sure I understood what the triangle is on the chart.
Right, okay. We have our automatic setups come here as labels like this, but if I use our training mode or bar replay, this might make it a little bit easier. So if I go back to here, let's step forward one bar and you'll see what happens here. If I step forward one bar, you can see that suddenly we have a TS3 setup come here on the chart. So therefore we place the analysis on. In this case it will be 2 contracts, but that's our setup. We then step forward another bar. You can see we've now taken out the entry level, therefore would be in a long trade. We then move forward. In this particular example, oops, I'll go back a bar, sorry I went too quick there. Here you can see that suddenly we actually went down below the stop level, therefore this trade would have been stopped out. So it would have been a -1 hour loss. In other words, this would have been a losing trade. So these triangles, if I now turn the training mode off, these triangles here show you areas where there would have been a setup at the time, and you can go in and analyze it and see whether you would have been filled and then you would have been stopped out. In other words, it shows you where there would have been setups. In other words, we don't want to hide anything on the charts, because nothing worse than a system that repaints its trade setups and suddenly forgets about its losing trades.
Gotcha.
So does that help? Does that make it clearer?
Yes, thank you. So I mean, it shouldn't come as any surprise that you can't just blindly take every single setup that's printed on the chart. You have to apply some discretion and experience to the trade, right?
That's right. Well, this is what I'm going to try and build as we go through, and what I'm covering to start with is for initial traders. We want to make it easy, so we have a color-coded trend direction, blue, red, black, dead easy to understand. We have our setups that you can follow, again relatively straightforward and easy to understand. And then our position sizing, which is the key. And I think, guys, if you want to take one thing away from this webinar, take away position sizing. You can apply it to any strategy that you're using, and this really will help, because it will keep your losses small, hopefully your profits large, and keep them all related to each other. So that's the big sort of takeaway point of this part of the webinar. If you want to learn more about position sizing, the world leader on position sizing is Van Tharp. His book, or his last book, The Definite Guide to Position Sizing, is a very, very good read. And well, coincidentally, if you go to page 248, you'll see a mention of MTPredictor in that book. So it's really nice that we're actually reviewed in the world leader's book on position sizing. And I'll leave you all to read page 263, which is the summary on his review of software programs for position sizing. So again, I just wanted to show you guys that this isn't something that's just invented 2 seconds ago. It's actually backed up by world leaders in this particular field. Right, so that's the first part of what I want to talk about, and it's what I call step 1. It's trying to take the 95 to 97% of losing traders to stop them losing, not make them rich, because that takes time and effort, but basically take step 1, which is stop you losing, by a structured approach to trading on a simple to understand system. Now, obviously you've seen some good examples here. Let's have a look at perhaps a Forex chart. Let's go to a British pound chart. So I just want to show different markets, different time frames. We'll be looking at lots of them throughout the webinar. If I put the STF on here, this is the British pound. It's literally unfolding in real time as we talk now. Suddenly you can see here was a TS1 sell. STF, we placed the analysis on. You would have been in a short trade and you would have lost. TS3 sell, you'd have been in a short trade and, well, maybe in this case you would have got your stop to break even, but the point being is that the trade did not go down to the first target, and let's take a worst case scenario and you would have lost. So what I want to do now is move from the standard kind of trade setups, and as I've already said, we have a scanner that you can set up here. In fact, actually, if I take a couple of seconds now, I'll show you a bit about how you can use different parts of the software. So you can have, let's say, you have this scanner, so it just flicks in and flicks out like that. You can have it docked where it is, so we have all our charts in tabs like this. You can bring your charts around as you wish and stack them and do whatever you and organize them however you want. We have workspaces down the bottom that you can organize your charts in as well, so you can have different workspaces. Once you've got your charts here, you can grab them, you can float them like this. You can float them off into a different window if you wish. You can basically grab and drag and do them whatever you wish. In fact, you can take a whole workspace like I've got there and grab and take the whole workspace with all the charts inside off to a different monitor as well. So there's lots of things you can do with how you organize your MTPredictor charts and workspaces and all things like that. It's all basically trying to get you to lay out the software as you wish and however you feel comfortable using it. So it's quite a modern software. It's actually designed in WPF, which is quite a modern language. For you guys who are follow Mike's webinars quite a lot, you'll know that NinjaTrader 8 is being developed in WPF as well. So here's the way modern programs are going. Right, so now let's have a move up to the next stage. Now this is where things are going to get interesting, and hopefully some of these more advanced techniques hopefully you guys will like, and again a lot of them you can take away and do in your own trading as well. So the first thing is we have this STF indicator which gives us our trend direction. Now any of you guys who've been around the block for a while will know that any indicator works on past history, therefore it will always be slow to change direction, in other words recognize any new trend. And as we've seen on this Forex chart here, you can see that the STF was red, the market was actually going up, therefore you might say, hang on a second, it hasn't recognized the new trend, it's a bit slow. So what we need to do now is have some techniques and some tools that will actually move in advance, in other words be on the chart in advance, or what we call leading indicators. So what we try and do is if we're trading a time frame, for example a 5-minute chart, 3-minute chart, daily chart, 50-minute chart, whatever, we try to look at the larger time frame, and for this I like to go 3 or 5 time frames higher. So for a 5-minute, let's change it to a 15-minute. Now I want to take the chart back, again using training mode just to show you how these are on the chart in advance. We have some pivots automatically on the chart as well. These are there just to give you ideas of the swings and show you pivots to use to place these levels on. Here is the major high. Here's the last swing into the high. For you guys who follow our training regularly, this is a swing that I use a lot. We go back to the last pivot low, right mouse click. Everything's off the right mouse click to make things quick and easy for you guys who are using the software. We use our decision point tool. And I think, Mike, this is one of the tools that you said you'd like to see in action and see how I use it as well. So what happens is it then projects a level in advance. Now I want to stress this again, is that these are leading, these are on the chart before the market gets there. In other words, they're sitting there ready and waiting for you. If I now move the chart forward, you can see it goes down into that support level and then starts to rally, 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 rally up. If I turn the training mode off, you can see how it caught that low quite nicely. Now I know you guys who are going to be looking closely at this webinar will say, okay, that's all well and good, that one worked, but there'll be loads of other situations where you put levels on the chart and they don't work. And that's what trading's about. Trading's about probabilities. It's not about putting analysis on your chart, and this can apply to anything, and then just seeing whether the market will actually do what your analysis says. That's called forecasting. That's not called trading. There's a big difference between forecasting, which most tip sheets and gurus will do, and actually trading. The difference is, with trading, you place your analysis on the chart and you wait to see whether the market is going to actually start doing what you anticipate. The way I teach it is like driving in fog. If the picture's unclear, you don't go very quickly. In other words, you go with caution. If the picture's unclear with trading and any levels you have on your chart, the market doesn't seem to be reacting at them or doesn't seem to be doing what you anticipate, you go to another time frame, another market, or have patience to ride it out. But the trick to trading, and this is what the discipline that most amateur traders lack, and actually there could be a whole webinar on psychology and discipline in its own rights, but the discipline to only react and only do things when the market is doing what you anticipate, in other words, when the picture's clear. And that's probably another tip that you could take away from trading or this webinar today, is only trade when your picture is clear. If you're unsure, and I bet most of you amateur traders are unsure a lot of the time, and that's perfectly acceptable, don't trade when you're unsure. That will save you a lot of money. So let's leave this decision point on the 15-minute chart. Let's go back to the 5-minute chart and suddenly see what difference it makes. Well, can you see here, this 15-minute decision point has provided us support on our 5-minute chart. Now what that means is as the market is rallying off this, like that, let's make that a bit bigger, as it's rallying off this level here, it means that the larger degree trend has turned up. Now we anticipated this in advance, so that means we actually know that this trend direction is up, and we know it's up a long way before this STF indicator changes trend. So can you all see now that this TS1 cell, this TS1 cell is now against the larger degree uptrend. So this is the first step we get you guys to do, is move away from our STF indicator to start to use our DPs, which are leading on the charts in advance to get the large degree trend. And then suddenly this allows you to filter out some otherwise losing trades, and it also allows you to do some more advanced trade management, which we'll see in a minute. So this is the first step. And this comes with experience and with teaching. So for you guys who just come in, have a quick look at the software, mess around with the automatic setups for a while, don't like it, go away, will never ever see this part of the software. But if you do get through this, you can suddenly see that hopefully this will help by giving you levels on the chart in advance. And they're dead easy to put on. If I just clear the chart off, let's take the chart back, this particular chart back to anywhere around here. Again, here's the last swing down into the low. This is one I like to use a lot. We place the DP on here. Again, it's on the chart there, ready and waiting for you. So Mike, if you're using the software, this is the big thing you want to try and do, is have these levels on the chart ready and waiting. If I now move forward, this is what the British pound did earlier, up into our level there, and there we go. And nailed the high there nicely before it came off. Now again, I stress that these don't work all the time. Trading is not about that. It's about having things where you deal with probabilities and you work with them when they're working. And again, no system is going to be 100%. That's not the idea of trading. The idea of trading is having an approach that will keep the losses small, which is our position sizing. So can you all see how these could be helpful and then take you to a level above our standard and automatic setups? couple of other things we do in the software. Let's go back to the 3-minute chart. I'm just going to take this back to the end of today. A couple of other things we do in the software for a bit more of advanced traders. So I'm just going to up the speed here and up the gear a little bit. Just I want to go through 2 or 3 other trade setups we use for what we call the more advanced traders that shows you some of the other routines in the software. I've already said that STF color, blue, you should only take buy setups. However, for more advanced traders, there are 2 exceptions that you can do to take a trade that's against an STF color. The first of these is when they're at larger degree of support or resistance. So in this example, you would have gone to a 15-minute chart, put your DP on and seen whether there was a trade setup at that or a resistance at that level and a trade setup coinciding at that, and then you could take a trade based on that. In fact, we'll have a look at an example in a couple of minutes' time. The other one is using our Elliott Wave tool. Now, I'd love to do a poll here at the moment. I'm not going to do one, but I'd be interested to actually know how many people have tried Elliott Wave, how many people don't like it, how many people have given up with it, and find it really hard. So I know Mike said he doesn't like Elliott Wave, and to be perfectly honest, I've done Elliott Wave for years and years and years and years and years, and I don't like it either. So what I did was tried to have a look at that and said, right, Elliott Wave is confusing. Let's strip all out the confusing, and I've developed over the years what I call my isolation approach. In other words, I look at the most obvious count in isolation. I don't look at any past history, forward history, intraday sort of minor counts, counts within counts, all of that stuff, all complex corrections I threw out of the box and said, we don't need it because that's forecasting. A little while ago I said there's a big difference between forecasting and trading. What we need is we need a way to, so I'll just turn my Skype off there, sorry about that. Do apologize there. It's the way it always goes, you also get to turn something off. So as a trader, you want to just identify a trade setup that has a potential to get you into a trade to keep the initial risk small. So for this, we have our Elliott Wave routine in the software. Dead easy to do. Right mouse click over a pivot, do Elliott Wave intermediate. If there's an Elliott Wave pattern, it will place it on the chart. If there's not, it won't. Simple as that. It finds all the simple patterns, 1, 2, 3, 4, 5, ABC correction. No complex corrections, no X waves, no confusion, nothing like that. So one of the exceptions for a trade setup is when we have a 5-wave sequence. The DP trade I said right at the start is a trend termination. Now normally if you try to take the end of a trend, most people will say that you don't do it because it's like standing in front of a freight train, and I agree with you. You want added confirmation either by larger degree support or resistance, or in this case the end of a 5-wave sequence. Our coloured zones here are what I call wave price targets. These are levels where each Elliott Wave pattern is likely to end. So here, this was at the end of a 5-wave sequence. It was at the wave 5 WPT, therefore is an area where you could likely want to take a trade. We have a history triangle here, so just as Mike highlighted earlier, if I placed the analysis on the history triangle, you were taken in for a trade short, you were then stopped out, you would have had a losing trade. Yes guys, losing trades happen. They do, they happen all the time. The trick is keeping the losses small, which is our position sizing. Position sizing is absolutely vital, and again, as I said earlier on, take one thing away from this webinar, take away position sizing. So that would have been a losing trade minus 1 hour loss. The next setup comes in, we place the analysis on, down to our first target. Instantly you can see that 2.7R is 2.7 times greater than the loss earlier. Suddenly your profits start to get larger than your losses. And this is the key to successful trading. Again, another point you need to take away. Don't try and go for a high percentage system because it's so hard to do. It really is. Most software vendors will love to sell these kind of systems, but they normally get them through back testing over a short period of time, optimize systems, the market changes, the system change, re-optimize. horrible. These routines we do here have been the same over the last 12 years. They've been the same over the last 25 years, 26 years that I've traded. I've even tested this on charts going back, 9 and 100 years, and it's the same mass, the same thing again and again and again. You have to have consistency if you're to be a successful trader. One thing I didn't mention before was when we do our trade management, we have these grey lines in our STF indicator. Now these grey lines are what we call our strength band. Now what we do is if the STF oscillator, we have another use for it, if it goes beyond our strength band, we say that the market's strong, and we use our ATR stop, which is our red dots here, to run the trade. If the STF indicator is what we call weak, in other words less than this strength band, we assume the market is what we call weak, and we come out at our profit target. Again, that's quite rare to have an approach where you have two different exit strategies, but all based on one easy-to-use indicator down here. So this one, the strength band was exceeded, therefore we'd want to run the trade. So if I just grab and I drag that down, you'd have actually held the trade into pretty much the close, and you can see instantly the risk reward is updated. So this would have been a nice plus 4.8R profit. But 4.8R profit in relation to minus 1R loss is the way you should go for trading. So this is going to be the theme of the whole webinar, is that you need to try and get you guys keeping your losses small, under control, and your profits larger, and over that time you have big winners, small losses. So this is effectively what we're doing in this second part of the webinar with our more advanced strategies. The first part on the automatic setups was to stop the amateur traders losing. Step one, discipline, position sizing to try and get you to stop losing. Second stage, and it's probably the hardest stage, is to then get you winning. And this is what we're doing with these more advanced techniques, is allowing you to find trades that have bigger profits to their initial risks, and it gets you to start making bigger wins. Let's have a quick look at another example. We've all seen the stock market today. It fell like a stone here, didn't it? Absolutely fell out of bed. If I look at the STF indicator, we had a couple of sell setups here. This is a 3-minute chart of the YM, by the way, so just the mini down. STF happened to be blue. Here, so this wouldn't be a standard trade setup. Now, do you remember the other exception I said is that rather than at the end of a 5-wave sequence, I'd also, for an advanced trader, consider trading this if it was at a larger degree support or resistance. Now for this, I want to go to the hourly chart of the YM. This is actually the 24-hour chart, but you can either stick on the day-only session, as we tend to use, or the 24-hour chart. Now, do you remember? Oops, I'll just take this back in a bit in time. So again, I want you to stress before the market gets there. Do you remember what I did earlier? I look at the last swing into any high or low. Here we basically had a triple bottom. The last major swing into the low was down here. If I go back up to this level, I place the DP on. There it is, out there in advance, ready and waiting for you. This is what the YM did today. Up into that level, fell like a stone, went straight back up again. Pretty horrible. But the point being is that earlier on, this was the level that the YM reached, but it reached it on the higher time frame. So if you're at a higher time frame, then when you're trading, just turn that off.
Hey,
and
Steve.
if you're trading the shorter term charts, YM,
I don't know
shorter
if
term chart for this, you could then probably consider a trade. But this would be a messy trade, so not really one recommended.
Not sure if you're up to date,
Yes,
because I know your time zone is different, but that whole little mini crash that was the Associated Press's Twitter account being hacked, and they sent out a fake tweet, a hacked tweet saying that the White House had been bombed and President Obama was injured, and all that happened within like 2 minutes and was quickly discounted as it was fake and their account was hacked, and so that's what happened.
That's quite interesting, but it's interesting that when that happened, that it happened at this level that we had on the chart. It's amazing how many times news stories produce levels like this. I mean, throughout my years, I've sort of traded through. I mean, I remember when President Bush was shot, and Mississippi flooded, and obviously the euro crash and all that kind of stuff. We'll probably look at a euro chart in a bit. All these kind of news events, it's amazing how many times that they are the reason given for moves, but it's amazing how many times these moves come off these levels. It is quite uncanny. Anyway, so that's what I wanted just to show there. There was another area of where you can consider a trade, probably not one that I'd actually want to take myself because it was horrible, and let's say it happened on a flash news event. Always nasty things to get in and around. Right, let's have a look at a couple of other charts. Oh, well, there's our British pound chart we looked at earlier. Right, actually, before I go to that last chart, there's another trade setup that I like to look at before I get on to what Mike was talking about at the start, which is what I call my Holy Grail trade setup. I'll talk about that as the last one. But one other one I want to look at, I'm going to have to bring a screen capture in here because I want to show you a good example, and I haven't. There wasn't a good example in the markets today. Again, this is a trade setup you guys can actually look at yourself, and it's based on professional buying and selling. So again, it shows you that what we do in MTPredictor is not purely and simply just automatic trade setups, which so many people just look at and that's it. There's lots of other stuff we do that gives depth to what we do here. This is a great trade setup because it's based in and around a fake out or at a level. Now this is great because it catches most amateur traders on the wrong side. Now again, I'm sorry I can't show this on the actual software, but I just want to talk this through. What we're looking for is an important level, an obvious level on a chart like we have there, where most technical traders can say that that's an important pivot. In other words, I know that, I can see it, there it is. We then look for a bar that goes through that, and it goes through that on increased volume. Now in MTPredictor we have these volume bars colored, so it actually comes out and says, look, this particular bar is red, there's something going on with this particular bar. There's higher volume than normal, there's something happening with it. Now most amateur traders will look at this and say, right, if we actually break out above a prior or previous high on increased volume, this is probably going to be buying. Increased volume, new highs, buying, love it, I'll step aboard. However, our DP level, as we've already seen, is in advance, and it gives you areas of where markets are likely to make reversals. So what we look for is if we have one of these bars that go through a level on our VSA indicator, it then hits our level, that's the important thing, and then reverses. In other words, the market fails to follow through. In this case, it fails to follow to new highs. Now what does that say about the volume that was in this first bar? Well, it says that professionals have stepped in and they're actually selling into the amateur buying. The reason that is like that is because if it had been professional buying, the market would have carried up. Basically, the professionals move the market. As amateurs, we haven't got the weight to step in and move the market. We just have to go on the coattails of the big boys. So this then reverses at our level, and it means that the people who are long here are now going to have to get out fairly quickly. And this all happens at our decision point level. So this is what we're looking for. So once we've got that, we can then do a trade setup around this. How do we do the trade setup around it? I'll just do the next screen capture, where we can use our target as our DP off our last swing. Again, you've seen me do this a number of times in this webinar. Here's an important high. Here's the last swing into that high. We place the DP on our chart. That gives you an area. And again, remember that these DPs are on the chart in advance, ready and waiting for you. We can then place our risk reward in and around this, where we go short just below the low of that sell bar that has failed to follow through. Our initial stop is just above the high. Our target is at the DP level. And as you can see, well, this is the YM last week. And as you can see, it came out with a nice profit. But again, the profit is large in relation to the initial risk. Position sizing comes into effect there to keep the initial risk small under control. But the point being is that this is a move generated from professional intervention in the markets. And you'll see this again, again, and again. And if you're an amateur trader and you see increased volume going beyond a prior level, be suspicious about it, because the professionals may not be going in the same direction that you think they are. So this is a good area of where to look for a reversal. Again, use our DP level, which is on the chart in there in advance. And again, it's something you can do in your own trading. It's something you want to be aware of, that professionals may be moving the market in the opposite direction, and you normally get a nice move in the opposite direction off that. But this, I wanted to include this now because this is another trade setup that we look at for the more advanced traders that's completely beyond our automatic setups. In other words, it's something we teach you to do based on professional intervention in the markets. A nice one for you guys to follow. Right, the last chart I'd like to look at, I'll only be here for another few minutes looking at this, and we'll get on to questions. I'm sure you guys will have lots of questions on this. Let's have a look at the US dollar, Japanese yen. As a quick roundup, again, this is live data coming in here. This is what the US dollar, Japanese yen has been doing today. Sell setup here, STF blue, so you'd avoid it. STF is black. Here's a sell setup, so you could take it. Standard trade setup, profit 4R, in other words, 4 times initial risk. Lovely trade setup, pretty standard. Here's a DP buy. STF was red, so amateur traders or new traders will say, I don't like this. However, this is one of the exceptions that I've said already, in that if we place the edit waves on, 1, 2, 3, 4, 5, again, this is taken in isolation. It'd be very difficult to try and fit this 5-wave sequence into any prior pattern going on before. But that's not the point of the edit wave tool. The edit wave tool is to only identify an area where a reversal is likely to occur to get you in with a small controlled risk. That's what trading is all about. It's not about forecasting, it's about risk control. We place the analysis on there. I'll just take this chart back a bit. There's our first target. Whoops. It's hit our DP there. Our STF in this case is beyond our strength band. You can see it's just clipped below, above the grey band there. Therefore, we'd want to run this with our ATR stop. So we'd want to run it a bit further. However, there's one other area that I teach as well, is if we have a 5-wave sequence, the initial target is the DP from the wave 4, which has been met there. If we go beyond that, which we have here, the entire prior sequence is normally corrected. So you come back to this level right at the start here, and you place your DP on the chart. There it is out there in advance, ready and waiting. If you wanted to, you could then have a look at that and say, well, actually, if the market gets up there, that's a pretty good trade of a 7.7R profit in relation to a -1R initial risk. This is what the market did, went up, clipped it, went down, went up. If I turn training mode off, there's that really horrible spike, been up, yucky and horrible. But the point being is just look where it stopped, right at that level, again, which we anticipated in advance, ready and waiting. If I take this off, I'll just leave that DP back on there. That's our 15-minute DP. As the last trade setup I'd like to look at for today, this is a 15-minute chart. Here's a larger degree resistance area. You can see that's on the chart there. The market found resistance as that on a 15-minute chart. If we're now trading on a 5-minute chart, there's our larger degree resistance. The market came down, it then came up, I'll just move this across a bit, and gave us a sell setup. I know you're screaming at me saying the STF is blue. Well, it's blue because this setup came very quick after the initial the initial turn. But because our DPs are leading indicators, this was giving us a heads up of this important high earlier on. I've chosen my words very carefully there and said this is an important high because it found resistance at a higher time frame. The initial move off that would be considered wave 1. The correction to that would be considered wave 2. It wouldn't be just a 2 or B, it would be wave 2 because we're coming off an important high. Now this is the trade setup I call a holy grail trade setup. The reason I call it that is not because it has a high percentage of winners. That's not what trading is about. It's because it has profits that are much larger than the losses. I don't want people to get hung up on the name, and in fact actually I think the best thing to do for you guys is to, as Mike suggested, we call this a wave 2 trade setup. So don't get hung up on the name, a wave 2 trade setup. Just want to put this in sort of context. Is if we go back again, I don't want you guys to think these are trade setups that have just been invented. I've done a lot of research on this, a lot of work on this, and if you go back throughout history, if we go back to the days of W.D. Gann, we've probably all heard of him. If you read his books, he will actually tell you that the safest place to buy or sell is in the first correction in a new trend. If you look at Elliott wave theory, and R.N. Elliott came a little while later, he was saying that the strongest wave in a wave sequence is the wave 3. It's the longest and strongest wave. So if you think about it, the best place to make the biggest profit is in wave 3. Where does wave 3 start? Well, it starts at wave 2. So these two guys, Gann and Elliott, are now telling us the best place to take a trade, not for the highest probability of winners, but to have your highest profit in relation to initial risk is trading the start of the wave 3, which is the end of the wave 2. Oops, I didn't mean to take that larger DP off, so I'll just go back and put that on. Sorry about that. Take that back again to there. There it is. So let's place the analysis on here. So instantly we actually know that we don't want to trade this into our first target because we are anticipating this is going to be a wave 3. I'll just take this back so at the point of the setup there. So we're not going for our first target, we're anticipating this is going to be a wave 3 swing, so we actually go out to say let's have a look at the typical wave 3 WPT as our first target. This increases our profit potential significantly. Turn trading mode off. You can see that caught you on the short side as the market was going down there very nicely. So this is what I call my Holy Grail trade setup. Again, I don't want you to get hung up on a name. Please don't. It basically will spoil the significance of this particular setup. For me, it's my favorite setup because it has the largest profit potential in relation to the smallest initial risk. It's backed up by Gann, it's backed up by Elliott, and I think it's one of the best trade setups you can take. Why is it so hard for many other people to find this? Is because if you're doing Elliott wave theory, as we've already seen, Elliott wave theory is full of confusion. It's very difficult to know where swings start because you want to try and get the end of price sequences. It all gets messy. Whereas what I've tried to do with this is make it simple and straightforward and say, right, all we really need to know is the start of the sequence, which is a larger degree support or resistance area. The initial move off that is wave 1. The initial correction is wave 2. The move off that is then going to be a strong wave 3. And that's the basis of this particular, we'll call it a wave 2 trade setup. One last word on this is, just out of interest, we see the market zoom down here really, really sharply. I'll just take the analysis of this particular wave trade down here. Remember what I've done loads and loads of time in the webinar? Here's the last swing high. Here's the last swing into that pivot high. Loads of times I've actually taken the decision point level off this particular low, and just look what this market did. It went straight down to that level and made the pivot turn there before rallying up again. So that was nice to have on your charts in advance. Amazing how many times these DPs out there in advance will catch turns. So that's the trade setup I really want to end with. And so Mike, if we really want to call this a wave 2 setup, hopefully you guys can see why I like it. And why it's my favorite is because, not because of the high percentage of times it will be winners, but because the profit is normally large in relation to the smallest initial risk. So for me, it's one of the best trade setups you can have, because what we're after is large profits and small losses. And this particular trade setup, backed up by Gann and Elliott, gives you the largest profit potential I know of in relation to the smallest initial risk. Right, they're the trade setups I really wanted to look at.
Okay. Do you want to open it up to
A couple of
questions?
other things I want to show on software. I mean, Mike's going to come in with a question now, then I'll just do a couple of other features of the software. So yes, Mike, sorry for interrupting there.
Well, I just want to ask, do you want to take questions now, or do you still have something else to show us?
One other last thing, I'm just on use of the software very, very quickly, is we've seen that we can populate we have our scanners here ready and ready to go. Just want to show you how easy it is to set these up, in that we've designed it that you can actually build symbol lists. So you can have a symbol list that you can make, and then when you've you can just literally say, right, all the symbols in that particular list. In fact, actually, let's do a new scanner. Close that. If I do a new scanner, let's say I want to draw in all my Forex list on, say, 5-minute charts, down, whoops, and then download. It'll just go in and do them all at one time, make it really, really quick, really easily. We set up these by our symbol manager, and in here we can create any symbol list we want just by taking markets from our predefined symbols there, and you can just create lists as you wish to make them there. When you've got those lists, a chart, these lists are all available here, so you can really quickly and easily just down to what market you want, have another list there, swap to what market you want. This makes it really easy to use the software in whichever way you wish, depending on what markets you wish to follow based on your list. So that's the last thing I really want to show, just for ease of use of the software. So I'm happy to open this up and see where our questions take us.
Okay, so as you guys have questions, just type them in right now. Let me take a look at what questions are already up here. Tom is asking if you can talk about your win percentage. I mean, I think it was emphasized many times in the webinar that win percentage is not really important, and I just want to say something briefly on my own here. On the forum, I see constantly that newer traders focus on win percentage, and it's just not important. 80%, 90% win rate does not mean you're profitable. So you need to be looking at the entire picture. I like to look at expectancy personally. Steve's talking a lot about 1R risk versus 2, 3, 4R reward. But Steve, do you want to answer what your win rate is overall?
Well, because we're not a sort of mechanical system, we don't publish figures. We're not a TradeStation where you just take the automatic setups, plug them in, and get a sort of figure out from that. As you've seen, or hopefully people have got from the webinar, our automatic setups are only like the first step. They're only purely simply designed to stop you losing. We try to then do the more advanced setups, which are discretionary, and they are where you start to make the bigger profits. So it's very hard to get a figure on. I mean, I have asked a couple of my, I've actually asked in one of our training webinars if any of my customers would like to give some figures on how they'd be doing on their own trading. I don't quite know whether that's the kind of thing you want me to mention or not.
Sure, that's fine.
Yeah, again, before I say this, to stress that just because some of our traders are doing well, it doesn't mean that everybody does. If you come into this, have a quick look, mess around for a couple of weeks, this trading basically is what I'm saying, takes time, it takes effort, it takes training. It really does. And if you're willing to make the effort and take the time, the rewards can be there. I mean, one of my guys in Germany, I asked him, he's actually been trading for 15 years, doesn't want to be named obviously, but he's coming to MTPredictor, spent about 6 months working really hard, learning, researching, that kind of stuff. He's been trading his own account since January, and basically on his Forex trade he's up 204R risk units. Started trading the E-minis about 6 weeks ago and he's up 35R, so he's up 239R so far this year, which I think is pretty good. I'm not saying that everyone can do that. What I'm saying is that if you do take the time and effort, there is potential there, but everyone won't. It won't be that everyone can come into this and make money straight away, because a lot of people don't. They expect to buy a system, make money, a fortune with no effort or no work, and we know that the trading industry or trading is not like that, don't we?
And we should also mention, you've been showing us the standalone MTPredictor 7.5 platform, but everything that you've shown today, does that also exist in the add-on that's available for NinjaTrader?
Yeah, I mean, do you want me to open it up just for a second and just so they can see it on the screen? Is that okay?
Sure. I just know that a lot of people here use NinjaTrader, so if they're more comfortable charting with NinjaTrader, then they could do that, right?
That's exactly right. So this is our standalone software that takes data feeds from eSignal, IQ feed, FXCM, Rhythmic, Zenfire, and actually use it in its own standalone charting package. But if I start NinjaTrader here, you'll see that we have some add-ons for NinjaTrader that go onto your NinjaTrader charts. I don't know how up to date this is. There we go. Well, there's the NQ we had from earlier, which I was showing you. Do exactly the same kind of things, all our base analysis and the stuff that we did on the standalone version is in our NinjaTrader add-on. The one thing that is additional on NinjaTrader add-on is we have a trade module here, and what this allows us to do is not active now because I haven't got real-time data coming in, but basically when you place analysis on the chart, it will pre-populate all this for you and allow you to place the trades with just one click. In fact, actually, I'll just very quickly connect to eSignal and just show that. So there is an additional thing in the NinjaTrader add-ons that you can use as well. So there it is. It's now, if I go back to that analysis, it's now pre-populated everything there. So you can just you can't execute the trade because the trade's not it's not trading at the moment, but you can just execute the trade and it will place the trade with all the correct position sizing, and we've got various tools there that will either change the ATR stop or take profits, your targets, and all that kind of stuff based in and around our MTPredictor analysis. So if you're NinjaTrader users, that could be of interest as well.
And I wanted to ask the stops. We know that percentage-wise, sizing, how many contracts to take is controlled in the account setup in your risk settings. But as far as the actual stop level and the actual target level, those are built into the software and looking at the waves in order to determine that. Is that right?
Yeah, so these come in around our what we call one tick beyond our levels. I mean, you can actually, if you want to, for example, if you're trading Forex and you want to give it a little bit more wiggle room, so to speak, you can offset your entry level and offset your stop level by however many ticks to give yourself a bit more room, because particularly Forex, sometimes a one tick stop can be too tight. You want to give it a little bit more wiggle room. So yes, you can adjust some of these things in the software as well.
Okay. Jim is asking, what does the MT stand for in MTPredictor?
Market turn.
Okay. Bruce wants to know if you can show the Gann-Elliott setup.
I think Bruce was actually suggesting that's what we actually call this this particular trade setup, rather than calling it the Elliott Wave 2. Perhaps he was suggesting it might be Gann Elliott,
because they both,
which is probably a good name. But again, I don't want people to get hung up on the name. That's not really the important part of that particular setup.
Gotcha. Let's see. Dee's asking, how much drawdown do you tolerate on one futures contract? So, again, this is a risk question. I mean, it's going to be...
It all depends on your...
Sorry, go ahead.
Yeah, I mean, for newer traders, less risk is what we suggest. Take things slowly. Everything that we do, you want to do things slow. So here we're risking 2% of your account, but by all means, if you're actually a new trader, down it to 1%, whatever you're willing to tolerate personally. I mean, this is the thing about not necessarily systems, but rather than having one system that every trader should be forced to use, what we want to try and do is try to say, right, okay, every trader is individual and they have different risk tolerances, so you can adjust this to suit your own risk tolerance. We don't know exactly every trader personally, so 1% risk might be more applicable to you, or 0.5% risk, or whatever, and it's it's all configurable within the software.
Okay, and again, important to note that when you change that risk level, your stop price is not changing. It's just the amount of contracts that you're trading.
Exactly, that's right. So if I change that, tools, accounts manager, so for futures, percentage risk 1, and now if I go back to that NQ chart, rather than 8 contracts, oops, if I refresh the chart, it will now go down to 4 contracts. So it's taking 4 contracts, but the stop level remains the same, target level is the same, entry level is the same. It's just the number of contracts varied, because you're now risking 1% of a $20,000 account. You're not risking 2%.
All right. Okay. Elliot wants to know if you can show just regular. I don't know if he's asking about high-low candles, but also range bars.
You can actually do candlesticks if you want there. Again, they have our MTP coloured entries on those, but we also have the normal standard candlesticks, filled for a down, open, or hollow for an up, so you can plot in candlesticks. In MTPredictor 7.5, our standalone version, we can only plot time-based charts at the moment. If you want to place or you want to trade with different kind of charts, for example, range bars or tick bars or whatever you want to do, then I do suggest you actually use our NinjaTrader add-on, because obviously NinjaTrader can plot any kind of chart you wish, and therefore you can place our analysis using the type of chart you're most comfortable with.
Okay. Adam wants to know if there's a trial available.
Yes, we basically sell the software on an initial purchase of $95, and then the balance 15 days later. So basically within that 15 days you can cancel the second payment. So effectively you can get a trial for $95. But obviously we hope you keep the software. But that's if you did want to only do the excuse me, the trial, it would be $95.
Sure, and that makes sense to me for all the support and everything that you have to provide during the trial. I know how many people would otherwise just do it for free and then consume all of your resources.
That's right. I mean, we have regular training webinars. We have regular weekly webinars on how to use the software. We do all the standard email and phone support, and I've got a very good team working for me, so it's very good to have the guys working for me. They're all ex-traders, so they do know what they're talking. Very, very pleased to have the guys working for me that I do. They are a good team. They are very, very helpful and willing to be there for people with questions and support them.
And Did you say how long? How long was that period for? Was it 2 weeks? The $95?
15 days, yeah.
Okay. Okay. So I see Adam asking if it's compatible with Sierra Chart. So that the standalone version would work with. You mentioned all the data feeds. What were they again?
Right. We go to tools. We can use ASCII or Metastock data for end-of-day data, and for real-time bar chart, eSignal, FXCM, MetaTrader 4, Rhythmic, our ZenFire, and we're actually working at the moment on a web interface into TradeStation with the TradeStation guys. They're doing a new web API link into TradeStation, so we're working with them.
Okay.
We're hoping we can do that sometime in the near future, but that's work in progress.
And so the standalone version would be charts only. There's no trading from this application, but you could then use whatever trading DOM you want, Sierra, whatever, to execute.
Exactly, that's right. Exactly, yeah.
And then if you are one of the many people that are using NinjaTrader, like most people on BMT, then you could just use NinjaTrader charts and take advantage of the automatic trading, which looks pretty nice. Okay.
Exactly, that's right. So this is an add-on for an extra $495 that then places the trade straight away with all the position sizing built in and lots of other trade management as well. So that's all on top of the NinjaTrader charts if you're a NinjaTrader user.
Okay. Attitude Trader's asking if it would be safe to say that you believe time-based charts are good or sufficient enough for this type of analysis opposed to tick, range, or volume charts.
And personally, I've always used time-based charts. I mean, probably old-fashioned on that kind of basis, but that's what I've always used. But say, excuse me, if you did want to use other types of charts, you can do a NinjaTrader, and we do have lots of customers using
Right.
tick charts, range charts, etc., etc. It's all the same to us.
Okay. All right. Well, that's actually all the questions on the board right now, and I know that you're getting sicker as we go, so I'll let you go get some water, and we'll post the recording for this webinar sometime on BMT tomorrow. And if people want to get in touch with you, I see you're bringing up. Yeah.
Yeah. One last thing. If people want to get in touch with us, MTPredictor.com. You go to our contact tab there, and either use the form or there's our email, phone addresses, email addresses, and phone numbers there. Feel free to get in contact.
Okay. And so if anybody has any questions that were not answered during the webinar, then right there you can email them or just go to their website, MTPredictor.com. All right, Steve. Well, I appreciate your time.
Okay. Well, I'd like to. Yeah.
Hope you feel better soon.
Well, I'd like to say thank you very much. I'd like to say thank you very much to you, Mike, for having me today. It's been very enjoyable to talk to you guys, and it's been a great pleasure to present to your forum. So, Mike, thank you very much for allowing me to come in and do this. It's been great.
Yep. Thanks very much, Steve, for your time and to prepare everything. And I'll see you on the forum. Thanks, guys.
Great. Thanks.